Welcome to today's class. On today's topic, we're talking about the RSI indicator, the meaning of RSI overbought and oversold, the meaning of RSI divergence and convergence, how I trade RSI indicator, and different trading strategy on RSI indicator. If you're joining us for the first time, my name is BTC, and this is Teaching Power. Without wasting much of your time, let's get down to business. Looking at my screen right here, you see the RSI indicator, which you can easily found by clicking at the indicator tab on your trading view. If you click on this indicator, click on the indicator tab on your trading view right here. Okay, let me close and start for sure you see how I was able to get the RSI indicator. First of all, this is my empty screen right here. And what do? I went straight to this point and I click RSI, which is another word for relative strength index, as you can see, and I click on it. And this is the indicator right here. So I have to open it clear so we can see it very well. Now looking at this is the RSI we're talking about. And the RSI has two cap. When I mean two cap, I'm talking about the upper cap and the lower cap, or two band, the band and the lower band. Or do I call it? The upper cap is the 70 and above. The 70 and above is referred as overbought. Anything above here, as you can see right here from here now, is overbought. Also from here, overbought and overbought right here. Then the lower part is the from 30 and below is being considered as the oversold part. This is oversold, this is oversold, and this is oversold. Let me give you guys an instance what it means in the chart here. This is my RSI here on this chart, as you can see. Now this is the chart of gold. So as you guys can see, right here now, currently when gold get at this point, it was showing that it's been oversold. Right here also it was showing that it's been oversold. And right here also it was showing that it's been oversold. Now, the next thing you're looking at is mean of the word RSI divergence. RSI divergence simply means in terms of where you have your chart is moving up while the RSI is moving the opposite direction. It could be that your chart is going down while the RSI is moving the opposite direction. Just like divergence is they stand with the by the meaning of the word divergence. Something is diverging from the other. If you expected that RSI move the same direction with a chart, like e.g., look at here now, you guys can see the chart is basically going up here, and what happened? The RSI is going up. Now, in situation where you have the RSI is going down while the chart is going up, is being referred to as RSI divergence. Example, let's look at something. Let me give you guys an instance. Right here, you have RSI. You see, you have something like this at this particular spot. So you guys can see what happened. The chart basically is what is going down, isn't it? Now look at your RSI and look at what do we have in RSI here. You guys can see our RSI has an equal low. So you guys can see it has an equal low. What do you see here? You see an RSI divergence. Ideally, RSI is supposed to be going down together with the chart, but indirectly the chart is going down, but the RSI is maintaining an equal low, showing an RSI divergence. So divergence doesn't not always when it goes the opposite direction, even when it maintains equal lows, while the chart is going the opposite direction. When the chart maintains equal low and the RSI is going the opposite direction, is referred to as divergence. And what does this thing simply mean? This thing simply means that the momentum is changing direction. Let's say even if the chart is rallying up, while the RSI shows the volume or the momentum in the market. So once the RSI is diverging, it simply means that the momentum, or rather the trend is about to change. E.g., something like this. Look at this chart and another point here again. If you look at gold somewhere here, you see that gold is actually if you look at this chart over here, you see that right here you have gold heading down around here, isn't it? Okay. You have gold heading down. This is actually a downward trend. Look at this thing right here from here now. Starting from this point here to this point is considered as a downward trend. Now, but what do you have in RSI? RSI actually from here to here, the RSI actually maintain a more stable low and flowing by an overbought. What do we have? Then have we now followed by an a it's now being followed by a retracement, or some people can call it a pullback actually. So I also have to give you guys another instance. Let's look at USD JPY is to more clear on that particular chart. Looking at USD JPY here, you see that USD JPY right here has maintained. What do you notice here? And it has been on an upward trend. You guys can see has maintained upward trend, pull back, upward break of the next high, pull back. And what happened? As you guys can see, the USD JPY has been making high. The high here and the high here, as you can see, is making higher highs and lower higher highs and lower high, as you guys can see. But what happened in the RSI? RSI has maintained what an equal high. As you guys can see, it has been on equal high. So what do we have? We have RSI what? Divergence. What this thing really shows? This thing really shows that the USD JPY, the momentum is changing. In other words, the sellers are taking over from the buyers. And what do we expect? We expect that the market is gonna change direction anytime soon. Even if you look at it somewhere from here to here also, it makes the same thing again. So you guys can see right here, you see that it's how this is higher high. But what happened in the RSI? This is the RSI, which means equal high. That means that the momentum is actually changing. So now the next topic we are looking at now is how do I really trade RSI, or how do we use this RSI to confirm our conferences. Now, if you're someone that trade support and resistance, let me give you guys an instance. You're someone that is a support and resistance trader. What do? We look for point of support or rather point of resistance. Like example, now let's look at this particular chart right here with me. You have this chart here, this USD JPY on 4 hours, right? So as I see, this is USD JPY on 4 hours, and look at it now. And here exactly, particularly, is actually a point of we have an OTC region and this spot. As you guys can see, this is an OTC region here. And what happened? We have so what do we do? We went down. We go down to a small time frame, which is 1 hour time frame, right? Now going down to a smaller time frame, we have a breakout out of this structure. What do we wait? We wait for market to come down to this structure and we look for entry to take our shot. Now, looking for entry to take our shot now, we do it in confluence with our RSI now. As you guys can see, there are basically three things we look at in RSI. We look for RSI divergence, we look for RSI oversold, overbought. Understand? When you have a confluence of these two particular confluence, it gives us a higher like it gives us a more probability of trade being accurate. Now, example, let's say now look at it now. It's coming to this particular zone, as you guys can see. This was when you tap into this particular zone, which is here. And what do we have here? We have basically RSI came to the point of 70, even though it was not really that oversold, but we also have what RSI what divergence here, which is this point. When it came to this particular region, we have RSI divergence, which was look at mark the 2 points here. What do we have? This point was actually going up. And what happened in the RSI here? The RSI was actually what? Going down. So you guys can see. So what do we have? Our RSI divergence. Now, what the next thing we look for? We look for entry. And our entry is basically we can use an engulfing candle, red engulfing candle, or we can just choose to snap into the entry. And right here, though even though it did not give us an engulfing candle, but it still gave us a RSI. So we took our shot down here and we place our take profit down at the next low, or and while our stop loss is directly above it. Now look at it now. This is a trade here. We place our entry here. We place our stop loss directly above the candle. I will place our take profits where just at close of this candle. And what happened? This trade was actually a successful one. As you can see, it was actually a win. As you can see, the trade was actually a win. So using this RSI, we were able to win this particular trade. So it happens over and over. Like I can go a million and one times to give you an instance of where this thing basically play out. So, but there are degree of confluences. First and foremost, we have RSI overbought or an oversold. We also have RSI divergence. Where we have these two confluences meeting together, we tend to have a a high degree probability trade, and most times the trade tends to be a successful one. Example, let's look at also whether we can get something like similar to that. Okay, now look at this particular spot now. we have something similar to the right here. You can see we have an equal low here, which was equal low right here. We have an equal low right here now on the same USD JPY. And what then we had this RSI here. We have an equal low right here, and this is the RSI. Now the first RSI was here, and the second RSI was here. As you guys can see, we have an equal low here, and we have what do we have here? RSI what divergence from here to here, isn't it? Now on this RSI divergence, now remember before the RSI divergence, we were having RSI oversold, showing that the market is about to change the direction because oversold actually signal that market is the thing is about to change. Now we already have oversold and now followed by RSI divergence companies. And what do we have? Now we have an entry. As you guys can see, this was a perfect entry here. That was an engulfing candle, a bullish engulfing candle. Now what do? We place our buy at the opening of this closing of this candle and our stop loss below the candle, and we take our profit. Right? We can take depending on how I want to do it, 1 to 2, 1 to 3 risk to reward, or you can also place through the market what the market gives and what the market gives. The next resistance point of resistance, which is here. You can place your take profit here, extend it. What do we have? This was actually a beautiful trade, as you can see. So RSI is something that gives a high probability trade actually only if you know how to trade it very well. So I just want to say thank you so much if you have been with me to this point. And in case you have not subscribed to my channel, please do subscribe. I tend to drop this kind of content every day by day until the end of this class, which we are doing. And remember, as I told you guys yesterday, we are doing class on all the trading indicators you need to be profitable as a trader. Today we did on RSI. Tomorrow definitely we're gonna be doing on MACD. So thank you so much. Enjoy your day.